let's talk about the different types of home appraisals or home appraisal types. Some of these technically won't be done by an appraiser, but I think it's just makes the point that these are the different ways to value a home or to do the valuation of a home rather. So first and foremost, what is an appraisal? An appraisal is going to be something where a third party is going to go out and verify what the home has recently or comparables in the area have sold for recently, and then try to assess some sort of market value based on recent sales of the home. So understand it's data of things that have already sold. So it looks backwards. So that's not to say it's what somebody's willing to pay for the house, because especially let's take during COVID when things were just bananas, people were willing to pay more, but the appraisals constantly came in lower because than the purchase price, because again, the market was so fast and so dynamic that again, these appraisers are going backwards in time to look at homes that have already sold. So that's an appraiser trying to make an assessment to say, based on things that have sold that are like this home in this area. And there's a whole, we'll put a link in here around it about how the appraisers go through and come up with those valuations. But that is what appraisers do. So let's talk about the different appraisal types. You'd say, well, how can there be different types? Well, bear with me. So first of all, there's the normal, air quote, normal appraisal, which is like a full appraisal, which is where an appraiser is going to go out and they go inside the home, they look around the home, they love it, they take pictures, they make observations, they may discuss with the homeowner any repairs and improvements they've done over time, and just get information all about the home. They then go compare it to normal comps that just say, okay, here's what it is. So that's a full appraisal. They're doing everything. They're taking pictures. They're going out. Everything's great. A less intense, if you want to call it that, or less work type of appraisal is what's called maybe a drive-by or exterior only. And this is where it's exactly what it sounds like. It's a drive-by appraisal where the appraiser will go and just take a picture of the house, make sure that there is an actual house there. They'll do the exterior only part of the house and then give you the assessment. And there could be reasons for this. Maybe that house sold 6 months or 12 months ago, and there's already a lot of data and pictures and things online that they can access, that they can see, so they don't need it. The borrowers typically for this type of an appraisal, the person getting the home loan is typically very strong, a lot of money down, very safe, type air quote safe loan in the sense that the investor, whether it's Fannie Mae, Freddie Mac, or whoever, is going to have some type of assurance that you're going to be good. A lot of times, these probably more often than not, these could also be a form of a second appraisal. So in other words, they got one from somebody already. They just want to validate or get a second opinion. They might order another one from somebody else just to make them feel, warm and fuzzies, and do a exterior or a drive-by appraisal. A third one, which isn't really, like I said, done by an appraisal, it's the BPO, broker price opinion. Think of it this way, where a real estate professional, typically a broker, right? And again, BPO is kind of a generic term, or maybe it is, maybe it isn't a broker, but somebody in the real estate profession is going to go through and give that price opinion that says based on things they see online. So they're going to take the address. They may not even have a picture. They may use Google Maps for all I know to get some assessment and kind of give you that opinion that's kind of an appraisal light that tells you, hey, based on what I see, this is what we're doing. Again, these typically aren't used for mortgage loans, at least not in the traditional sense. This may be done more for like banks or some sort of asset manager that needs a quick valuation. Maybe it's done for second loans. Like if somebody's getting a second lien, like a HELOC or a second loan or something like that, they'll do it. The cost for that typically is going to be significantly less than a normal appraisal for obvious reasons. They're not leaving their office, right? And another version of that is called like a desk review. So desk reviews typically are for mortgage companies. The way I'm talking about it is like if an appraisal comes in and the underwriter just says, man, I would love a second opinion, but not so much that they need to pay for and go get somebody else to do it. They may send it to somebody internally, like a chief appraiser, internally, whose job is to do these desk reviews. So again, without leaving their desk, they go online, they do all their homework, they see what other comps could have, would have, should have been used. They then assess it and see if it's really good or not good. So those are the types of appraisals. You also might hear what's called like a real analysis. It's like a 1007. So the real analysis is just somebody that's kind of doing the appraisal, but it's like an addition to, it's like a second part of the appraisal, which is they're saying, okay, this is probably, these are done on rental properties or homes that are about to be rental properties where they need or want to validate the income for qualifying. And they say, okay, they'll look and say that, hey, rents in this area are X. So it's like an appraisal, except now they're evaluating the rents and what they think the future revenue could be, or to validate current revenue that they're already getting. So maybe it's a refinance and somebody's getting this and they want to, they say that they can get X dollars a month and it's currently getting leased. So that's why they'll do the real analysis, is just kind of compare what they already have. But that's in addition to the appraisal. Rarely do you see that being a standalone by itself thing, because they need to know kind of the valuation and more about it as well. So those are the types of appraisals. Be sure to check out, we got more information around here about, again, how do they come up with the valuation in general. The cost for those things, like I said, can vary. The full appraisals can be $650 to $800. I mean, we've seen them be a lot more depending on the size of the home. The exterior only, maybe it's $100, $200 less than that. Real analysis, desk appraisals, sometimes those are free because the lender has to pay for them or eat them. So they're not free, but they're eaten up by the lender. So hopefully that gives you a quick, rough understanding. If you have any questions, if you're not sure when it's needed, don't worry about it. The mortgage company will tell you. You don't really have a choice. It's not your decision to make. But I do want to let you know that these are things that exist and when they might be used. And certainly if you have questions, call the Mortgage Mark team. We are here to help. And as always, when you think mortgage, think Mark.